Hi, Larry Gaines, Power Cycle Trading. I wanted to show you in this video an exercise that I do at least once to two times and sometimes three times a week in order to kind of keep a good perspective on the big picture of the market and then break it down to the smaller time frames. So this is what I call top-down market technical analysis, and you can do it using any type of technical indicators that you use or just basically price. But I like to do it using my trading model, and which shows, the lower study shows momentum. These are two momentum-based indicators. They're kind of all three momentum-based type indicators. So I like to do that, and then I like to look at the various moving averages and then track price to see how it's, staying within certain boundaries of the moving averages. And I also then will usually apply trend lines as well. So what I do is I start out with the monthly time frame first, and so I call this the macro big picture. So this is the big, if you're flying over 30,000 feet up in the air and you're looking down, you can really spot a lot of things. I mean, you don't get all cluttered up with the details, so you can see the bigger picture a lot more clearly. So I start out here, and if you look at this macro monthly time frame, you can see we're in still a solid uptrend, and it's just been holding this 8 EMA right here all the way up. So we've lost a little momentum, but my cycle 2 momentum indicator is still positive. So until that goes green like it did back here, the market still looks good to the macro upside. So you can see back here in about 2008, my cycle 2 indicator went negative and the market did roll over there. And also then you can look further back here and you can see the other time it rolled over was back in October of 2000. So right now still looking good from the macro big picture. Then the next time frame I'd go to is the weekly, which I call the long-term time frame. And this just gives you just a little bit more detail. Now you can see the market here still in an uptrend, but starting to go sideways. So with any uptrend, if you are going to get a downtrend or a market rolling over, it starts with the shorter term time frames, and then one leads to the other. So here's the weekly, and we're in what we call a volatility squeeze here on the weekly. So it's consolidating sideways, hasn't made up its mind as to direction. Now it could trigger and break to the upside, or if it triggers and breaks to the downside, this potentially could threaten that long-term macro uptrend. So that's the weekly time frame. And then I go to the next time frame, which is the daily, or I call the medium time frame. And you can see all the noise and ups and downs that are in this particular time frame. But it shows you these cycles and swings. The biggest downtrends or cycle corrections we've had for the past like 2 years has been about 6%. So anyway, by doing this exercise, it just keeps you focused on the big picture all the way down. Now also remember that markets are made up of multiple time frames, from tick charts to 1 minute, etc. So you need to look at the lower time frames all the way up. So if the lower time frame starts pushing lower, then that can trigger the next time frame and the next, and that can then upset the bigger picture. So keep that in mind, and I hope this exercise helps you. Talk to you on the next video.